It's about that time of day again. Back in the action once again. Hope you guys had a great day out there. Time to get back to work. It's Wednesday evening. It's August the 28th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, please be aware I help traders find high-quality trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job is very important this evening because my job tonight is to help you guys find the best levels of support and resistance, the best entries and exits, and of course, most importantly, some of the most important traps to avoid losses in tomorrow's trading session. It's Thursday's trading session. And we got a lot to cover here tonight on this video. We got some oil, some S&P and Nasdaq, of course. Then we'll go to the gold and we'll wrap up tonight on that euro. I'm going to start off with the black gold, the Texas tea, the crude oil futures. Had a pretty wild day today, right? Yesterday we had that inventory report that sent the markets flying higher, but of course they couldn't hold it. And they're sinking back down now here on that black gold. Let's check the crude oil futures and let's see what that plan looks like here for tomorrow morning's trading session. We started off here with that big blast higher, right? The last time we saw each other, right, we were talking about that spiking channel, right, and buying off the low of that spiking channel. Well, you can see we got this big run higher here, ran all the way up to a key trend line, and we'll talk about that in tonight's video in more detail here. But you'll notice, though, a very easy to see 1, 2, 3 reversal. Now, a 1, 2, 3 reversal, that really is the big clue here on this chart right now. We know we're bearish. We know momentum is the sell side. I don't want to sell down here, though, because this point now, this is where buyers will be coming in. This is where profit taking will be for the sellers. So I don't want to sell too low down here. That 1, 2, 3 reversal tells me exactly where and what setups I'm looking for here tomorrow. I want to be a seller. I've got my hidden channel. I've got my battle zone. And of course, we're going to talk about some sell setups here, looking to sell high up around that hidden channel here tonight on this video. But I will also say too, right, I'm open-minded here today as well for buying off that low. I'm also considering here being a buyer off that low. I need to be very specific, though, a very specific setup to buy in a bear market. I'm also going to talk about, right, what to look for if the market tumbles, because I have another key level down here, another key level coming in. We'll talk about this in tonight's video, but of course, we'll talk about how to trade it down to that key level at that 54 and change there. So make sure you stay tuned tonight. Got a lot to cover here on the oil, looking to buy it, looking to sell it. And how about that S&P? How about that S&P? Beautiful, beautiful rally higher here on the S&P tonight. You can definitely see the S&P is bullish right now, but looking closer at looking at a bigger picture, and you can see where we are, right? We're definitely bullish, but where are we? We're right up around the high of that range. So it's not a very good spot to be buying up here. This is, in fact, probably the last place that I want to be buying right now. In a range-bound market, I want to buy low and sell high. So this is a range-bound market overall, right? Range-bound market. I want to sell high here right now. But how do I sell high when I've got all of this bullishness? We're going to talk about a couple patterns that I'm looking for tomorrow morning to sell off this high safely with the target going back down into that range. And then hopefully we'll get back down to that low, and hopefully we can buy this thing right as we go later in the session tomorrow. So trying to sell high, trying to buy low, but maybe you're shaking your head right now. Maybe you're saying, no way, Joe. There's no way I want to sell this market. I want to be a buyer on this. At what point can I safely start buying this right now? Because as you probably realize, it's not enough to just get a strong move outside the range, right? This strong move outside the range is likely going to end up back down in, unless we see one very specific pattern. In fact, no, I've got two patterns we can look for here for a potential breakout. So what is it? What's the best thing to look for a buy here? We'll talk about that. How do we sell it? We'll talk about that as well. And of course, a lot of details there on that S&P. Nasdaq is very similar, but there's one very, very important difference between the S&P and the Nasdaq, and I'll give you a hint. It has a lot to do with this range, right? This big range here, right in the middle of that chart right now. Same thing as the S&P, right? It's a range-bound market. We want to buy low. We want to sell high. I want to be a seller up here. I want to sell going back down into that trading range, but I'll tell you right now, that's a pretty bullish move here, right, since about 9:45 this morning. So very bullish with momentum right now. How do we sell in an overall bull market? We have to be very specific with the entry pattern, and even more importantly, and again, we'll talk a lot more details of this tonight on the video, but that trading range, the size of the range, where we are in relationship to that range is a very, very big clue, and we'll talk about how that will change the type of entry setup I'm looking for here on this Nasdaq tomorrow. Definitely make sure you stay tuned if you're a Nasdaq trader like we are in the trade room. And then over on the gold, it's a little bit messy here. Okay, it's a lot messy here. It's a pretty messy market here. You can definitely tell there's a lot going on. You can definitely tell it's a summertime session right now. Gold's all over the place here. And trying to make sense of it, it looks like we got ourselves a big expanding triangle right now. But then there's also another triangle right there. So there's kind of a lot of conflicting signals here right now on the gold. Bottom line is we know we are in a range. We know we have a bull bias. I'm going to keep looking to buy these lows here on gold, right? Every time it goes lower, and we talked about this last night, right? It's gonna take a lot for this market to go lower and stay lower right now. So every time the market runs lower, I'm looking to be a buyer off of those lows. But what if the market tries to push higher? Can we sell off the high? We can. We saw a great example of one of my favorite reversal patterns right earlier on in today's trading session. How can we sell it off the high? If this is the first time you're here, you definitely want to stay tuned for this gold, because we'll talk about the best way to sell right off a bull market. And then what about a breakout? What would another breakout look like? We'll talk about those 1, 2, 3 breakouts and those 2 patterns to look for to trade those breakouts here on gold. Got a lot to cover here on that yellow metal. And of course, we're going to wrap up here tonight on the euro. On the video tonight, we got the euro going lower here, as you can clearly see here. Had that big run up at the end of last week, right? And then of course, it's just been slowly grinding its way down here. We've got ourselves with a wedge. Now, wedges are really great patterns because they really tell me a lot of important information. We're going to talk about how that wedge, because I'll tell you, the wedge tells me direction. It tells me location. It tells me target. It really tells me everything I need to structure a trade here tomorrow on that euro. So if you're a euro trader, or if you just want to learn really one of the, I wouldn't say the rarest, but one of the rarer, we don't get this as often. These wedges can be tricky if you haven't seen a lot of them. So we'll talk a lot more details on the best things to trade and the most important things to avoid when you come into a wedge-bound market. All right, we got the euro ready to roll here tonight. Gold, Nasdaq, S&P, crude oil. Boy, we're going to break this thing wide open here in just a few moments. But before we jump into those charts, I just want to remind you guys to make sure you join our mailing list. That way you never miss another great video. You know, guys, you may not be aware of this, but I send an email out every evening when this nightly newsletter goes live. Just before I publish the video on our YouTube channel, I fire off an email to everybody on our mailing list. And I want to make sure that you get that email. That way you get the first crack at it every evening when it goes live. It's very, very easy to join. All I need is your first name, a real email address, please. I'm going to send you this email, so you got to give me a real email address, and then hit that subscribe now button. And then don't forget, guys, when you subscribe, right, when you hit that subscribe now button on the right-hand side there, your job isn't over yet. You still have to go in and check your email, because I'm going to send you that welcome email with a very important verification link that I need you to approve. Okay, so when you join the mailing list, you got to go check your email, check the welcome email, get that verification link, right? I'll also send you a bunch of goodies, a bunch of great free resources for you guys so you can get the most out of our time together every evening on this nightly newsletter. And then before we jump into the video tonight, I have a question for you. You know me, I'm always trying to make this newsletter the very best it can be. I've got a question for you. If you could go back in time and do this over again, what's the most important things you would avoid and the most important things that you would really focus on? You know, imagine if you had a redo, right? Imagine you get a gift, right? You get a ticket, and that can send you all the way back to the beginning of your trading career. What would you do differently? What are some things that you would never waste your time on again? and what are the things that really have helped you the most. And maybe you're a brand new trader. If you're a brand new trader tuning in tonight, then I have a different question for you. What do you think is the most important obstacle to overcome to becoming a successful trader? Is it technology? Is it mindset or psychology? Is it strategy? If you're a brand new trader, down in the comments section for me here, drop me a comment. Let me know in your eyes, if you're a brand new trader, what's the biggest obstacle that I can help you with in this nightly newsletter. I'm always trying to make it better. Right? Or if you're an old dog like I am, right? You've been around the block a couple times. What if you could go back and start over again? Right? I'd love to know in your eyes, if you could pull a mulligan, if you could get a redo, if you could get a reset and go back to the beginning, what would you skip? And what would you put your effort into? I'd love to hear from you guys in the comments section below. Always appreciate your time on that. And I always read those comments and reply to comments myself because it means the world to me that you would spend the time to give me that feedback. And I'm always trying to make this video better. Also, don't forget, while you're down in the comments section, give me a thumbs up on the video tonight. If you tune in every evening and watch this video newsletter, I can't thank you enough. Hit that thumbs up button if you love the video every evening. And you may not be aware of this, but every time you hit that thumbs up button, YouTube rewards me by exposing this video to other traders who have never seen this channel before. So don't hog all the good stuff to yourself. Hit that thumbs up button. I really appreciate it because it means the world to me that you'll help me spread the word about our trading newsletter here every evening. So drop me those comments in the comments section below. Hit that thumbs up button, right, to help me expose the video. I always appreciate your support. And don't forget, speaking of support, I'm always here to support you as well. If you have any questions about charts, data, brokerage accounts, or maybe you've got questions about getting access to our trade room on a free pass, or maybe you want to get access to our free trading classes, call that toll-free phone number. My wife, Megan, and I are always here in the office to help you guys out. I promise I will not send you out to some call center somewhere. We're a very small family-owned company here in Los Angeles, and I can't wait to talk to you guys, answer all your questions, give you the truth that you need so you're not wasting time and money along the way. So call that toll-free phone number. Use that live support tool in the upper right-hand corner. I'm always here to help and looking forward to speaking with you guys. All right, in the meantime, let's get to work here, Joe. Let's get to work here. We got the introduction out of the way. Let's get some charts, but first, let's grab our calendar here for tomorrow. Tomorrow is what will probably be the last almost full session of trading. As you saw today, things got pretty quiet as we got into the lunchtime, right, in the afternoon session. So really, really important here tomorrow you be realistic with your expectations. We have that Labor Day weekend coming right around the corner. Tomorrow is Thursday. Friday is really going to be a half day. We'll talk about that in tomorrow night's newsletter, obviously. Friday will very much be a half day, and of course, next Monday, the 2nd of September, I can't believe it's already the 9th month of the year. We're going to be into 2020 here sooner than later. But so going into a holiday weekend, it's not just any holiday weekend. A lot of people are on vacation as we kind of finish up the last few drops of this summertime season. And thank goodness tomorrow, we got a bunch of news tomorrow morning, bright and early. Right, we got that GDP number, international trade number, jobless claims number. Now, I don't anticipate jobless claims to do very much, but I definitely expect that GDP number to be on everyone's radar tomorrow morning. And of course, tomorrow morning, we will definitely be watching this stuff. As it happens, we open up our trade room every morning, 8 o'clock Eastern time, and we will have a front row seat for hopefully some fireworks here bright and early tomorrow. The ideal scenario tomorrow would be a lot of great price action early in the session, make your money, head to lunch, skip the afternoon, right? And a little bit of trading on Friday morning. Again, it's Labor Day weekend, so it's going to be a shorter window over the next couple days. Tomorrow, we should get some good setups early in the day tomorrow, and then early in the afternoon. Right? And then, of course, on Friday, it'll be a half day. So we'll talk more about Friday's plan, obviously, tomorrow night in the newsletter. For tomorrow, though, 8 o'clock Eastern time in our trade room, we get that GDP news, international trade, right, at 8:30 Eastern time. And then, we may not have this on the schedule tomorrow, but we continue here to really keep our eyes open right now on the Fed and rates, on U.S. and China and trade. And of course, OPEC, right? OPEC has been squirming lately because they can't figure out how to keep these prices off $50 a barrel. And so we definitely anticipate we're going to probably hear from OPEC at some point this week, which will likely shake things up. We provide all the real-time news data feeds in our trade room. And of course, we'll be definitely listening in for that tomorrow morning, bright and early. So come out and join us tomorrow morning, 8 o'clock Eastern time. We'll get some big news at 8:30. Because as I always remind you guys, the trading strategy is actually very, very simple. We're going to go over that right now. What's not so simple about being a new trader is applying it to a moving market. And we'll do that together tomorrow morning at 8 o'clock Eastern time. All right, looking good. How about some oil here? We'll start off with some oil. Go S&P, Nasdaq, gold, euro, right? We got them all here lined up and ready to knock them down here right now. What do we know? What do we know about oil right now? We know that oil started off after a very big, strong run-up yesterday, right? We talked about that yesterday evening on the newsletter. We talked about mark up that high, right? Mark up that low, and you want to buy, right, that pullback off the low. Okay, so we got that spike in channel. That spike in channel runs into really what is a major trend line, right, coming down overhead. If you were to kind of zoom out a little bit, right, you can see if I can squeeze all that in here for us right now. If you were to zoom out here, right, you get that trend line coming down overhead. So the buyers pretty much just sprinted up to get that trend line, right? And then, of course, you'll notice here as I zoom back in now, right, you'll notice here on this now, it completely fell flat on its face afterwards. So we get that big bull run up all the way up to that major, right, that major resistance here. Let's see if I can get my act together here, get this chart back in front of us again. And then we get this monster, right, this strong move down, pull back to the moving average, and a strong move off the moving average. Now this, of course, is what I call a 1, 2, 3 reversal. And as you probably have heard me say many times before, anytime we see a 1, 2, 3, I always start to mark up those lows and then bring it up to that high, and that creates what I call a hidden channel. So we know we have a bear market right now, right? We know it's a bear market. It's definitely not a bull market anymore. It was definitely bullish earlier today. Long term, it may be bullish, right? I'm not going to argue with that. Long term, it definitely is bullish. But in the short term right now, though, there's a great opportunity here right now to pick a shot going higher here, possibly with a trap high right off of the high of this new hidden channel. So we know we're bearish, right? I mark up that trend line off that low. I put it up at that high. And basically, I'm looking to sell now, right, up off the high of that channel. One thing I really like about this channel is it also gives me a trap opportunity up above that high. And this is one of my favorite setups. It's a 1, 2, 3 reversal into a trap high off a hidden channel. Remember, not a lot of people are going to know that channel's there, right? A lot of rookies are not going to know it's there, right? They're not going to see that channel, right? They'll see smaller channels. They won't see that bigger channel. So what I'm hoping that we'll get this market to rally higher. If I can get a nice strong signal coming off that swing, I can look at this as a trap off that high, right, and sell it back down. But more importantly, though, I'm hoping that you're going to see buyers that won't know that this trend, right, that this channel is now forming. And I'm hoping those buyers will try to buy off that moving average pullback, right? Hopefully they'll try to buy that pullback. And when they do, I can now sell right into those stop losses, which, you know, what I always assume is I always assume that, you know, any rookie, right? I assume only a rookie will buy that first pullback because it's not a bull market, right? I assume only a rookie will buy that first pullback, and most rookies use very tight stops, and their stop will be right below that low. How do I know that? Because that's what I used to do. I used to be the first one trying to buy that pullback, even though it wasn't a bull market yet. And we'll talk about what it's going to look like to become a bull market in a moment here. But looking to sell right into those stops, I also want to see if I can get that moving average coming over, and I can sell off that moving average as well. So once again here, I'm hoping here at this point we get this market to pop higher. If I can get a nice strong signal, I'll look for a trap setup off that high. The moving average now, of course, will come over, right? With that moving average coming over, I'm looking to buy, right? Sorry, I'm looking for buyers to take the bait. I'm looking for them now to fail. I'm looking to sell into that failure. And then, of course, from there, I want to see us up and over right from there, right? It's a failure into a pullback as we go. Very, very reliable setup. Oh, and actually, there's another one, right? That trap, right? A trap high into a buyer failure into a seller pullback. So that's some great opportunities there to sell off of that high. How would this thing become bullish, though? Right? How would it become bullish? At what point when it goes higher could we call this a bull market? There are really two scenarios you want to look for, right? Knowing that we have some pending resistance up here, one scenario is going to be another 1, 2, 3 reversal, right? We saw the 1, 2, 3 going lower. Well, hey, maybe it runs up again with a 1, 2, 3 reversal going higher, right? If it runs up for a 1, 2, 3 going higher, and we can actually get some strength coming off that moving average, well, now what I'll do is I'll mark up that high, I'll mark up that high, I'll mark up the low, and now I'll look to buy that low, maybe off the high of that channel. Doesn't need to be, but we'll see if we get that combined there. That will be a 1, 2, 3 reversal into what I call, right, a hidden channel pullback, or in the previous example, right, a hidden channel trap. We're trying to buy off the low of that channel. Where's my target? Target's pretty easy. Back up to retest that high here at that 56.75. So that's the goal, right? Get it up, right, back up to retest that high. Now, talking more about buying here. What if the market runs lower? Can I buy down here? I think you definitely will be able to. You know, again, as I mentioned earlier, you get all this bullishness, right? All of this bullishness. And remember that the biggest run there, that came after, that came off that news. So I'll bet there are a lot of buyers here who are still waiting down here. You know, they were waiting for a deep pullback earlier today, and I'll bet you're going to see more buyers waiting down there as well. So how could I buy this? What's the key? What's the secret to buying in a bear market? Well, first of all, you have to find some levels of support to use. So I've got this prior, where is it? Right there. I've got this prior swing high. That's going to be a level of support, right? I've got my measured move. That's going to be a level of support. So if you're going to go against the momentum in the market, right, you got to make sure you're at least incorporating some level of support, right? You want to buy at support here. And so really what I'm looking for is I'm looking for a slight variation of that failure pattern we talked about earlier. If I can get down to that measured move, this market's very bearish right now, and the only way that I can safely buy it is if I give the benefit of the doubt to the sellers and let them try a couple times. Let them try once, let them try twice, and once I see those sellers trying twice, at least twice here, now I know where their stops are, and now I can buy right into those stop losses. Does that make sense? Now remember, right, since we're bearish right now, if the market goes up, I can simply sell into the stops of those buyers, right? I can be relatively aggressive being a seller because it's a bear market. Again, short-term bear market. I realize it's a long-term bull market right now. However, right, if we roll lower here though, now momentum is a big deal, right? Now momentum is a concern. We get the measured move. We're in that support area now. Now, the sellers are not going to give up without a fight. Make them try once, make them try twice. Once we got 2 tries, and notice how I draw this, you want that second try to be greater than, not by much, right? But you want to be greater than that first one, right? It wants to be higher than that first one. At that point, now we know exactly where we want to be buying right into those stop losses, right, of those sellers. So that's going to be an easy way to pull, right, to catch that bottom here, right, off the low of that channel, off the low of that range. Now, how do we short this thing though, right? What do I need down here to see proof to sell it, right? And where, by the way, where would they be trying to go? Well, if we drop like a rock here, where are they trying to go? See this trend line coming up? There's one more here too. If I go back, and I don't usually go back this far, but you'll notice it really does line up there. That trend line down here, right? So that we have to assume that's probably where they're trying to go, right? So if the sellers do take control of this, they're going to probably try to make a run down to that trend line. As you can see, there's plenty of space, right, to work with. And so if I want to get short, the first thing I have to do is I've got to prove that that whoever is buying down here is failing, right? So I'm expecting a lot of buyers down here. So when we go lower, I'm going to first look for that what I call a nested failure, right? One try, two try, and buy back up. But if these sellers, if they can get a strong move down, get that moving average coming over, right? Strong move off the moving average. Again, this is called a 1, 2, 3 breakout at this point, right? 1, 2, 3. Okay, three-legged move to break out of that range. Now what I'll do is I'll mark up that high, or that low, I should say. Mark up that low, mark up that high now, and now I've got that hidden channel that I can use on this for that run going lower, right? For that run going lower. So that's going to be my go-to setup when we have a breakdown. Now, if we do see it run, right, if this thing really runs, if it really starts running here, the aggressive setup could be a 1, 2, go. Okay, this would be the most aggressive way to do it. And I say this because, we had that, it's a big range, right? It's a big range. And sometimes these markets, they can really get loose, right, as they rotate back and forth. So if it really does, right, if we really do take a nosedive here and really run after it, buyers will come in once. Those are actually profit taking first from the sellers. The real buyers will come in number two. What you really want is you want that little trap high, and that trap will basically protect you against those buyers who are trying to buy low, and you're literally selling right into those stop losses. Target, of course, is down at that trend line down there. So now we've got everything we need here, right? Now we've got the buy side, the sell side. We know where we should be looking for the best setups. Now all we need is a little bit more time to get some more candlesticks and see how the overnight session plays out here. Okay, let's make the move now to the S&P. But before we grab the S&P chart, though, if you're here for the first time today, I just hit you with a lot of information in a very short period of time. So if you're here for the first time today, here's what I want to do. I want to give you a lot more details of the entire trading strategy. I call it the three-step strategy, and I want to give you access to a free trading class. I'm going to put a link in the upper right-hand corner here right now. I'll also put a big red button right below that video tonight on our trading blog. Grab that big red button or hit that that link in the upper right hand corner here on YouTube and get registered for that free trading class. You'll learn all my favorite patterns, my 4 favorite entry patterns. You'll learn my 3-step trading strategy. Everybody loves the free course. I really enjoyed making it for you guys. And of course, don't forget, when you register for that free course, I'm going to email you the invite. And so, of course, you'll check your email on that. And sometimes that email gets stuck in your spam filter. So register for the free course. You're going to love it. I'll be here, of course, continuing on this nightly newsletter. Let's keep going. How about some S&P? S&P, as you can see here, is quite the bull market right now. But as I mentioned in the introduction, not that impressive, because you can easily see we are really right at the top here, right, of that trading range. This all started, as you can tell, right, on Monday, right? Monday we had that whipsaw session on Monday where they shot lower and ran back higher. And that pretty much set the tone for the whole entire week. You can definitely tell it was last week of August, because these markets are really just bouncing around here. Buyers keep buying low, buyers keep buying low, buyers keep buying low, sellers keep selling high, sellers keep selling high, and most likely sellers will continue to sell high. Now, there's always the potential that we might hear from U.S.-China trade talks. We may hear regarding rates from the Fed, but, pending any unforeseen news events or any, Twitter storms here overnight. And by the way, I still feel ridiculous even saying the word Twitter storm right now. It is absolutely insane, but that is the world we live in at this point, guys and gals. Like I always say, my clients in the trade room, right? You can't change the game. You got to play the game. That's the only way to win the game. You're not going to change it. You got to play it, right? In whatever game they're playing, right? You got to play it. You're not going to change it. So again, pending any unforeseen situations here overnight, we're at the high of a range right now, and ultimately we're just very, very bullish, right? Now, we talked about this a lot on the oil chart there a few moments ago. What's the best way for me to sell in a market that is so bullish? Well, first of all, you've got to make sure you're at a turning point, right? At some level of resistance, right? So if I want to be a seller, I definitely want to be at resistance. We get a great example of what I call a pendulum swing. Now remember, a trading range is a balanced market. So the amount of the move below the range is oftentimes the amount of the move above the range. And you can see we're right there. So if I'm going to try calling a reversal on this, I better be at a major turning point to start with. Then let's anticipate now where we might have some buyers coming in, right? This is something I learned from one of my first trading coaches many, many years ago, is you got to try to put yourself in the shoes of the buyers. So let's think about if I was a buyer right now, what would I be thinking? I would be thinking this is a spike into a channel. That's what I'd be thinking. And what does a spike in channel tell us? We talked about this last night, right? The law of threes. Remember that, right? 1, 2, 3, and then what? And then deep pullback, right? So we should see that deep pullback coming in here sooner than later, okay, here on the S&P. Okay, now, I would imagine now that deep pullback, what's going to happen? The buyers will try to buy it going back up to retest the high. How many times do you think these buyers will try before they give up? Probably a couple times, right? They're probably not going to give up in the first try. They'll probably try a second try. Aha! And that's exactly what I'm looking for. I'm looking for these buyers now to do exactly what I would do if this was a trending environment. But it's not a trending market, is it? No, it's a range-bound market. Range-bound markets are balanced, and what goes up usually comes right back down. So as I look at this, I'm at a major turning point. Yep, got that. As I look at this, I can easily see we're bullish in the short term with that spike in channel. Put yourself in the shoes of those buyers now. If I was a buyer, I know spike in channels very well. If I was a buyer, what would I be doing? I'd be buying off that low. And how many times would I try it? If I tried it first, I probably wouldn't give up right away. I'd probably try it again, right? I've learned that lesson a couple times in my career. If at first you don't succeed, try it again, right? But most people are not going to try it 3 times, right? You try it once, okay, that stings. Try it again, that fails. What's going to happen? A big red candle right there, right, is going to get all the buyers worried because they're in a lot of pain at that point, right? The buyers at that point now are going to be drowning in red, right? Their first trade failed. Their second trade's about to fail. Meanwhile, sellers can smell the blood in the water, right? This is when it gets fun to be a trader because you're actually watching these buyers go 1, okay, here's 2. And then once you see the sellers those buyers panic, sellers will come in, right, and grab this sucker and run it back down again. Now, what if I'm wrong about that? Okay, what if I'm wrong? What if we don't get a couple scenarios here, right? What would I do if it runs higher? Okay, or what if it just collapses lower? You know, let's think about that, right? What if we don't get the buyers to give us that setup? What if the market collapses now back inside that range? Now what do? We wait. We wait for what? We wait to get outside the range. Remember, a range says buy low, sell high. So again, I want to get the 1, the 2, and sell, right? Maybe even using the underbelly, as we talked about last night, right? Of that channel. Not required, but definitely a bonus if we can use it. What if the market collapses though, right? What if we just tumble? What if this thing tumbles back inside the range? Remember, the range is the no trade zone, right? You don't want to trade the range. The range is nasty. So what do we do with the range? We buy low, we sell high. I want to sell high, and to do that, I want to use a similar pattern. It looks something like this, right? But the opposite direction, right? 1 try for the bears, 2 try for the bears, right back up, right? So we go down, right? 1 try for the bears, 2 try for the bears, back up again. Think of that same pattern we saw back here, right? That's the pattern. I want to buy it back up again. Or opposite side, flip it around, 1 try for the buyers, 2 try for the buyers, right? And selling it back down. That will obviously be the pattern we're looking for most here. So again, if we tumble back down into that trading range, it pretty much goes right back into balance. We wait for the market now to try to leave the range again. That will usually bring the moving average over. The buyers will try to buy off that moving average, right? It's not a trend. It's a range. And so the odds are not in their favor, and we're looking to sell back down into that trading range. Or again, if we do go back into that range, we then look for that strong run down Again, look at this pattern here, right? Strong run down, moving average comes over. Bears now try to sell off the moving average. Again, it's not a trending day. What goes down is probably going to come right back up, and looking to buy right into that failure, going back up into that range. Now, what if the market just collapses? Okay, could happen, could, probably not, but could happen, right? What if it just collapses? If it collapses, remember, now momentum is way too strong just to buy it. And so now that bearish momentum says, one try, two try, then I go back up again, right? Now, just a heads up on this, we call this that's not 3, Joe, that's 2. See my math there? It must be getting late in the week here. I'm already skipping the number 2. All kidding aside though, these reversals, right? These reversals will take twice as long as you think they will. They will. One of the things I tell my clients is when you're trying to turn a move like this, right? Think of like a battleship turning around. It takes a long time to turn that battleship around, right? On like a speedboat that can just, flip a U. It's gonna run lower. The first try will be failure, right? You don't want to go buying too aggressively. Let those sellers try a second time. This might take 20 or 30 minutes, right? Between when we get the first move leg, right? The first leg lower, a couple minutes for the first try, a couple minutes for the second try. It could take 15, 20, 30 minutes to actually get that set up. I always tell my clients, just think of it this way. It's going to probably take a lot longer than you think it will. So right when you think it's time to buy, just wait a little bit longer. It's probably going to be a little bit later than that. Just remember, those reversals, they do take time. All right. Now, what about going higher here? At what point can I start buying? Remember, I don't want to buy up here because remember, this is a range, right? And so far this whole week, what's gone up comes right back down. What goes down comes right back up. Okay, this is not the first time we've seen a big strong bull move here and have it collapse right back down in. But what would I look for as we go higher? Well, first of all, where would they be trying to go? The next level overhead, and we talked about this earlier this week, is that 2920, right? 2920 is that big top, right, from earlier on in the month of August. So we know where they're trying to go here. What's the plan to trade it? There are 2 basic breakout patterns to look for. One is the 1, 2, 3 breakout. Mark up the high, find the channel, of course, right? And we're buying off that channel. And the goal is you're trying to get that combination of that first leg higher with the low of that channel. That's that sweet spot. That is by far the most reliable way to trade a breakout or a reversal or whatever, right? Whatever it is. This, of course, would be a breakout, wouldn't be a reversal, right? Or and then again, this is the more aggressive one, a very strong move higher, okay? This is where you got to have strength. Remember, on the 1, 2, 3, you only need strength on that second leg, right? That first leg up doesn't need to be incredibly strong. On this next one, this one does need to be very strong, okay? It needs to be so strong that you go, whoa, and you have that fear of missing out, right? What I really should call this is a FOMO breakout. Right? A FOMO breakout. That's what it is. It needs to be strong enough. It needs to be strong enough so that everybody in the market says, oh, shoot, I'm going to miss this, right? And they start getting uber aggressive, right? They start increasing their aggressiveness. Now, I'm not going to try to buy at this point, right? So on this kind of FOMO breakout here, what I want first is I want to see profit taking from those buyers. Because remember, if we get a big, strong breakout, a lot of people are going to say, oh, Yahtzee, and they're going to take half their position off, right? That's what I would do, right? If I was in a trade long and this thing jumped, the first thing I would do is say, okay, take half off right now, put that in my pocket. Just like going to Vegas. If you get lucky the first machine you sit down in Vegas, right, take that money, put it in one pocket, and you don't even touch it, right? That's what a lot of mindset is for a lot of new traders, right? I would do that too. So it jumps up, take profit first. Now what's going to happen is now you're going to see sellers come in. And you're going to see a bunch of sellers that will sit right above that high, right? And they're going to try to come in, try to pick that top because they know that breakout traders are trying to buy that breakout, right? They know that rookies will try to buy that breakout. So sellers will now come in and they'll try to sell just a little bit just a little bit ahead of that. Okay? That creates 2. Now, once we have that second try now, now I've got the profit takers, the buyers are now on the sidelines, and I have the short sellers. Now all I need is a nice strong signal candle. That signal candle is going to do two things. One, it's going to tell all of the profit takers, the people who took their money out of the market first, this is the FOMO I was talking about, right? Now those buyers who took profit, they're going to go, shoot, I'm out too early, get me back in. Okay, they're going to jump all back in. And remember, mentally now, they're trading with house money. So they'll just jump in aggressively. It's a very loose, it's a very short fuse on that trade. I know this because I made that decision, not necessarily a mistake, but whenever you take a big profit, you're very quick to jump right back in again because psychology, you're playing with house money, right? It's not really house money though, it's my money. Okay, remember, don't think like that, but that's going to happen, right? People that got out early, they're going to have that FOMO to get back in. Then also the second thing that happens here now is the sellers, right, who try to sell the high, they're now seeing a big freight train going to run them over, and they're not going to wait to get stopped out. They're going to get the hell out of that position, right? In fact, a lot of sellers, if they're rookies, will flip their position, right? You hit the close or the reverse button, right? If you're a ninja trader, right? You know what I'm talking about, right? There's a button that says reverse. Okay, which really should never be used, guys. I'll tell you right now. If you're hitting the reverse button, you know that means, right, closing your short and buying long. If you're reversing positions, that tells me you're probably losing money, right? Because if you can be convinced at what direction you want to go based on one candle, something's wrong, right? Well, we'll talk about that in another lesson. But that's called, right, and again, I call the two-try breakout pattern, but really it should be called the FOMO breakout. Right? Trading the FOMO breakout. Strong move up. Bears try once. It's actually profit takers first. Bears trying second time. Make sure it's a higher high to really rope in all those bears, right? And then buying right into those stops from there. Okay? That's the most aggressive way to do it. And again, you got to have that strong FOMO breakout, right? As it goes higher. All right. Awesome work. So now we've covered all the bases there on the S&P as well. Over the Nasdaq here. And don't forget, I know I'm covering a lot right now, and I realize this is a lot of information if you're brand new here tonight, but that's exactly why I have that free trading course. Okay, I'm not lying. Grab that free course in the upper right-hand corner. You'll love it. Now, over on the Nasdaq now. The Nasdaq is very similar, as you can see, to the S&P, right? It's an overall it's a range-bound market. It's a little bit uglier than the S&P has been this week, but again, it's last week of August. You know, beggars can't be choosers, as I said, right? So we know we want to buy low, we want to sell high, right? And hopefully we'll get a chance to sell this thing coming back down into that range. Most important thing is that we stay out of that middle, right? Buy low, sell high, and stay out of the middle. Okay, so I got my sell zones overhead. I got my buy zones down below. We'll clean that up here. And again, stay out of that middle, right? Not a lot of good stuff happens inside the middle. Okay, so we know we're up around the highs. We talked about this hidden channel from last night's newsletter, right? That hidden channel, of course, right, coming in, and you can see sellers here trying to sell off that high. So I'm going to get rid of that just for simplicity's sake, just so we don't get too confused here. Okay, now, looking at the chart in more detail, very similar to the S&P, right? We have the pendulum swing, the amount of the move below, the amount of the move above. We can clearly see now it didn't hit it exactly, but it came really, really close, didn't it? And as I mentioned last night on the newsletter, we really don't need to be exact on the pendulum swing. We just need to be close, right? It's got to be close. So we're close enough on this as far as I'm concerned. Now, as far as the trade goes, we want to go back into that range. Okay, want to go back into that range. But what did we talk about before? We talked about how we wanted to make sure if we're going to sell in a bull market right now or in a bullish momentum, it's a range market, we want to make sure we're at a level of resistance. We definitely are. We also then want to anticipate if I was a buyer, where would I be buying it, right? I'd be buying it now a little bit lower, right? I'd be buying it down here. I'd be waiting for a pullback. It's a spiking channel, right? Usually pulls back to the base of that channel. And that would also be where we'd probably see a successful breakout, right? If they hold off that pullback. Okay, on the S&P, we talked about looking for, right, the 1, the 2, and selling it back down. But you can see just by drawing this out right now, there's one big problem. Look where it puts me. It puts me smack right inside that range again. Now, I don't want to trade inside the range, right? I want to trade outside the range. I want to sell high. I don't want to sell the middle. So how can we adjust this? Or can we even adjust it? We definitely can. Okay? In this situation, I want to find a trap entry. So same idea as the S&P. I want to anticipate these buyers coming in once. I want to see twice. But more importantly now, to avoid trading inside the range, now what I need is a trap. Now, I don't know exactly where that trap will be right now, but I do know, though, that if we do our job correctly and we let these buyers try once and we let them try twice, right? Because, again, we are so bullish right now. This momentum is so bullish here. If we do let them try once, try twice, we're going to have to get high enough up here so that we're not selling right into that trading range. Now, what if the market collapses back down into the range? Same thing. Nothing really different there. If it collapses back into the range, we want to go 1 try for the bears, 2 try for the bears, back up in. Okay, now these come in lots of different shapes and sizes, right? Sometimes they'll do is, sometimes they'll run big one down, 1 try, 2 try, back up. Sometimes they're very small, 1 and 2. So it really all depends on what we get. But the bottom line is you want to make sure, right, like back here, you want to make sure when you get that 1 try for the bears, they try to sell off of it, I need to be getting in before we go back into that range, right? You're not going to buy all the way down here, obviously, right? You're not going to buy that because at that point, you don't have enough information yet, right? But once we start seeing those green candles closing, right, this is a good example because you've got to really be quick on that, right, getting in before we get back into that range. If you wait until you get back into that range, you're too late, and you run the risk now being chopped up. That one was a good example. So if we do collapse back down now into this trading range here, okay, we also know too, right? Want to sell high, buy low, mark up that range. I want to see it pop up, get that moving average coming over. Buyers try to buy off the moving average. Again, it's not a bull market, right? They should not be trying to buy that pullback. And we'll try to go back into that range off a 2 try failure pattern. Or we run lower, 1 try, again, moving average comes over, sellers try to sell it. And the only real caveat here is I've got to get that signal, right, before we get back into that range. And, you know, God forbid we get one of these patterns where it goes 1, 2, I can't take that trade, right? That trade is a non-starter for me. Okay, I'm not going to buy right into that range. Yeah, sometimes it'll go through it, sometimes, but a lot of times, though, it chops up and spits me out, right, only to find it go back up later on in the session. So stay away from that middle, buy those lows, sell those highs. Again, if it collapses, right, if it collapses here, now that momentum is just way too strong just to straight buy it. I also don't want to just buy into a failure either, right? If I just wait for those sellers now to come into that moving average and try to sell off that moving average, it's very tempting here to want to buy into their failure. But remember, as it goes higher, you know, you've got traders who will trade the 23.6, the 38.2, the 50%, right? You're going to have a lot of resistance areas as it goes higher here. And so sellers will come in, they'll try one more time. Once I see them trying once I see them trying twice, yeah, now I know I've got what I need now. Now I know all the sellers have that rope wrapped right around their neck. And all we need is a nice strong signal, and I can buy into those stops. Okay. Also, once the sellers try twice, all the professional buyers now, they're now drooling over a nice signal on this because they can smell the blood, right? They can smell it, and they're going to be jumping all over it once they get that signal. All right, guys? And then again, as we go higher here, where are they trying to go? Where would the next big milestone be here? What if What if we get a big, I don't know, right? Maybe China trade talks take a positive turn overnight, right? Maybe Trump posts a selfie with President Xi, right? And they're all laughing and giggling and happy together, right? Market goes running higher. Where are they trying to go? That would be a great picture. Might as well get Kim Jong-un in there too, right? Get him in on the game, right? Nice little snapshot there for their socials, for their profile, for their Insta. Anyways, all kidding aside here, we know where they're trying to go here, right? We know they're trying to go. What do we need? Those two patterns, right? 1, 2, 3. Again, doesn't need to be a strong move. 1, 2, 3. What needs to be strong, though, is that strong push higher, right? Mark up that high, mark up that high, mark up that low. There's your sweet spot right there. You want to grab that pullback. And, again, guys, I've said before, right? Think about that pullback area. This could be a failure into a pullback combination pattern, right? Kind of imagine that during that pullback. Imagine this kind of zoomed in, right? Kind of zoom in on that area right there. It's a failure, right? 2-try failure into a bull breakout pullback there as we go higher. And again, you can see a lot of examples of those patterns with that free course I mentioned earlier. Or it's that strong, right? FOMO breakout, 1 try, 2 try, 1, 2, right? And buying into those stop loss. Again, got to be really, really strong, right? Got to be a real strong move higher here. Okay, that way you can count on that fear of missing out, right? Propelling the market going higher here. All right, guys? So great stuff here on the Nasdaq. We're kind of waiting right now to see what we get here on the NQ. In the meantime here, let's grab some gold. We are coming into the home stretch here right now, gold and euro to finish up tonight's video. I've got the gold here tonight. Gold is pretty ugly. You'll notice here I've got some measured moves in the chart. Let's get some of these things off of here. I want to make sure you saw what they look like here. Measured moves there in the chart there. So now you kind of know where those are coming from. I would never leave so many lines in your chart there, but I want to make sure you knew where they were coming from. Most important thing right now is going to be this range. That range is the magnet. What goes down is coming right back up, right? What goes down comes back up. What goes down comes back up. So we definitely want to be looking for a buy here on gold. We are overall bullish overall. So of course, if I have a big bold move going into that range, I definitely can be a lot more aggressive being a buyer off of those lows than say being a seller off the high, right? We want to see a very specific pattern to sell off that high. And one of my favorite tricks in a range-bound market is to look for higher highs, look for lower lows, and kind of plot these as what's called an expanding triangle. And then use this expanding triangle for my key levels of support here, right? Use the opposite side as my target, right? Or vice versa, right? Use this as key resistance, use the opposite side, right, as your target. So I really like it when I've got some trend lines that I can use. Okay, those are always right, pretty beneficial. I can also see here too, and this is it's not pretty by any means, but if you draw the trend line off those lows, off that high here, you'll notice everything really just all clicks together here pretty well. So I like the inverted triangle or the expanding triangle. We know we're bullish overall. So the overall bullishness definitely means I can be a little bit more aggressive with the bull side than the bear side. I've got my areas of support and resistance. Now you guys know by now, right? Stay out of that middle, right? Buy it low, sell it high. So now we kind of know what we're looking for here. What I'd like to do is get down into that expanding triangle area, right? Get down to that buy zone down here. Again, really, I want to use that trend line, kind of these two trend lines right there, right? Imagine this little spot right there. Okay, that's kind of the sweet spot there. So I got that trend line coming up. I got that trend line coming down. I'd like to get down in that area right there, right? Of course, if we do get down, right, into that area, that'll bring the moving average over, right? That'll bring your moving average over coming down. Sellers will undoubtedly think this is a bear market. They'll try to sell it. And we can, of course, look to be a buyer into their failure. That'll be a failure setup into a pullback setup. As long as we have enough space for that pullback, sometimes that pullback setup comes a little bit too late, right? Like this one back here. Here's a strong move down. Here's a seller failure off the moving average. But see what happens? The pullback comes in too close to that range. See that? You see what I mean? Nobody wants to buy that pullback. That pullback's too close to the range. Remember, anytime you're right near that range, there isn't a very good risk-reward ratio. Does that make sense? Okay, so if I was to get a failure pattern right here, this is a failure pattern that has a pretty bad risk-reward, right? The risk I have to take is not worth the reward. Well, I mean, it might be, depends on what your definition of worth it is, but for most professional traders, if you can't get at least a 2-to-1, doesn't mean you're going to get the 2-to-1. It just means the potential for it is a 2-to-1. Remember, that's a very important thing to remember. A lot of people talk about, well, I've got to get a 2-to-1 on my trade. No, you just want to make sure you're taking trades that have the potential for a 2-to-1. Because what that will do is that will get everybody excited about that position, right? That spot. For example, we get a nice run going lower. That moving average comes over now. I get that failure off that low now. The amount of risk I have to take on this trade is small in comparison to the potential reward, right? Again, it doesn't mean I'm going to get that huge reward. I may get a first target and then get stopped out of my trailer, right? But what it does mean, though, is everyone's going to be paying attention, and that's going to increase your odds of success. So what I want to get away from that range, right? That's one of the biggest reasons why you got to avoid the middle of a range. It's not just because it's crummy price action. It's crummy price action because it's the risk reward ratio isn't that great, and the poor risk reward ratio doesn't get anybody excited, and that because that lack of excitement, that will translate into a lower probability on that trade. So I want to get down off of that low. Now, another thing to consider here too would be if it really runs lower, right? If it really runs lower, like I mentioned earlier, get that measured move down here, right? If it really runs lower here, again, we have not held the pullback yet to be a 1, 2, 3. At that point, if it really collapses, now you want to think nested, right? 1 try, 2 try, and buy back up. So this is all about momentum, right? If we see a pullback and do a failure back in, that's great. But if it really tumbles, just like we saw in the S&P and the Nasdaq, right? If it really tumbles, you want to think 1, 2, and then go up from there, right? Then go up from there. You can almost see it right back here, right? This is a very slow time frame, obviously. You wouldn't be trading this time frame. Strong move down, right? 1, 2, back up in. Right? Strong move down here. 1, 2, up in you go. Okay? So strong move down. It's a nested and then back up. Okay. Now, again, if we get in the middle here, stay away from the middle. What if we make a run higher here? Okay? There are kind of 3 scenarios you're thinking about. One of them would be a nested failure, right? That 1, that 2. Now, let's talk about this because the range is really small, right? Yeah. The range is really small. And so whenever you've got concern, and we just talked about this in the Nasdaq, what's the most important thing? Trap. Okay, so if we get that nested, again, buyers try once, buyers try twice, and the reason why you would look for that nested failure is because you're going against momentum. Good example back here. Big, strong run up. You're going against momentum. 1, 2, trap, and back down. That's the same exact pattern. We go up, 1, 2. Again, don't sell too close to that range because why? The risk-reward ratio is going to trip you up on that, right? You don't want to be trading with small amount of reward, right? You definitely don't want a 1-to-1. You want at least a 1-to-2. Again, you're not always going to get that 1-to-2, but you want to have the opportunity for it because that will attract more people there. So that's going to be the first thing to sell at that high. Okay, as we go higher here, again, 1, 2, 3 breakout. Mark up the high, mark up that low, right? And we're buying that pullback from there. If we get a very strong 1, 2, 3 breakout, you'll get that next leg. You'll be able to get that bounce off the low of that channel. It's very, very reliable. All right? Or it's that strong run, right? That FOMO breakout. Now, because we have that measured move up here, if you want to trade that FOMO breakout, you're going to want to trap. You definitely want to trap. Right? So if you're going to get that FOMO breakout pattern, because we have concerns about that measured move, again, it's very different than a 1, 2, 3 breakout. A 1, 2, 3 breakout has plenty of confirmation. Everyone will jump on. If it just runs up, you got to grab that trap if you're worried about buying into resistance. Okay, and we talked about that one try, two try FOMO breakout, right, earlier on the last chart. All right, guys? And, of course, same thing to the downside, right? 1, 2, 3 breakout, hold that low, mark that high now, right? There's your sweet spot, and we're selling off that high. All right, guys? And, again, I want to remind you guys, I'm going quickly through this right now, but tomorrow morning, we're going to do all of this together tomorrow morning at 8 o'clock in the trade room. So make sure you come out and join me and trade this strategy with me. Next up here, over on the euro. Euro had that big blast higher here earlier on this week. And now the sellers are pretty much just kind of grinding their way down, trying to get back down to retest that low at that 10,700. So that 10,700, that low, is probably going to be the big objective here for those bears. I can also see here that strong move down. I've got that measured move. That's going to kind of create that battle zone, right? This will be a little bit of support down here. The bottom line is if we get down in this area, you're going to want to stay away from the sell side until you get that pop, right? And sell it after that pop, right? Get that pop to sell it back down. So that's the basic idea behind it. Now the big clue here is, as I said in the introduction, is this wedge, right? Wedges are really important clues because first of all, they tell me direction, right? Wedges tell us direction. They tell us do not try to rock the boat, go right with that trend direction. The second thing they tell us is target, right? We know exactly where they're trying to go. They're trying to go where those two trend lines are going to collide together. Okay, just also happens to be, as you can see, right around that low. So this area down here is a very, very important level of support. One more thing here, right, is the size of this wedge. Okay, as the wedge gets narrower, it becomes more difficult to get what? A good risk-reward ratio, right? So I can trade inside the wedge when the wedge is nice and wide. But when that wedge starts getting really narrow, now I can't justify trading inside of here because I can't get a good reward. Why is it important? It's important because nobody's going to want to trade when the wedge gets really tight and narrow. So what I'll do is I'll wait for the market now to pop. Okay, oftentimes the market now will pop. Okay, it's not a reversal. When it pops up now, moving average comes over. Buyers will try to buy it like it's a reversal, and I'll look there to sell it right into that failure, right? Failure pattern, into that pullback pattern, and back down we go from there. Hopefully that makes sense, right? So we have that wedge. We're starting to get a little bit too comfortable, right? We're getting cramped like a studio apartment right now. We want to get up, right? Let these sellers take their profit. People will stop selling at this point, eventually most likely, right? Price comes over the moving average. Buyers now will try to buy the pullback, okay, much like they did back here, right? We go up, the buyers try to buy the pullback, they're trying to take it higher, and of course, we're looking to sell into their failure, right? So buyers try to buy the pullback, right? We look to sell into that failure, and of course, that pullback pattern to follow it up with that target down at the low of that wedge. Now, another possibility here, as we get closer to that measured move, as we get lower, we may see this start going sideways. In fact, you can already kind of see, right, that sideways range. I hope we continue to see this market run sideways. Not a lot changes. We're going to wait for that move up. Moving average comes over. Buyers try to buy off of it. You know the drill now, right? And we're selling it back down in. I'm also watching this kind of a hidden channel here, right? I mark up these lows, I bring it up to that high, and I'd like to use that area as that key area of resistance, selling it back down. All right, now a move lower. If the market runs lower here, right? If it doesn't pull back, because it hasn't given us much of a pullback here this week. We got one right earlier on Tuesday. If it collapses lower, we're going to probably end up going sideways down there a bit, right? So if it collapses lower, we'll probably end up going sideways down there, and the plan stays the same. We're waiting for that pullback. We're waiting for the buyers to try to call the reversal, and we're selling because this is the best way to sell high, right? I can't predict I can't easily sell into it as it goes higher. You know what I mean? It's difficult to time the entry properly when you're selling into a market that's running higher. So I don't even try to sell into that. Okay, it's very difficult to time the entry. It's very difficult to use a small stop. But what I'll do is once I see those buyers now try to come in and take it, and they almost always do, that gives me a more reliable. It may not be the most profit, right? It may not be as profitable as if I could pick a top, right? But picking tops is difficult, especially if you're trying to use a small stop because you have a small account. So the moral of the story is we got to get a pullback right now, and then we can look to sell it right back down into that low. How about a reversal? Reversal, pretty easy, right? Strong move up, pull back to the moving average. You know the drill now, right? 1, 2, 3, reversal, mark up that high, mark up that high. Here's my low now. Perfect, right? And we're buying off that low, right? 1, 2, 3, reversal. All right, target at that point is up to retest that high, or it's a strong move up, 1, 2, FOMO breakout, right, and up from there. All right, and we talked about that in a lot more detail earlier. Remember, you got to get a strong move on that one. All right, guys, so we'll keep our eyes open now on this range, right? Keep your eyes open there on that range. Just be very careful chasing after it if it makes a run lower, right, because that's a major bottom down there, right? And, of course, we don't want to be selling into support. All right, guys, we're ready to go here. Tomorrow morning, 8 o'clock Eastern Time, Euro, Gold, Nasdaq, S&P, and Euro. And, of course, I want to invite you to come out and do it with me. Tomorrow morning, 8 o'clock Eastern Time, I get that GDP news at 8:30. So make sure you're there on time tomorrow morning. As always, we start off every session every morning with that morning ritual. We go over all of our patterns, go over all of our rules, and I want to see you there, right there next to me, elbow to elbow, trading this strategy tomorrow morning with me. Getting started is very easy. You can register right on the homepage of our website. I'll put all the links in the description of this YouTube video. So if you're on YouTube right now, follow the links in the description of the video. If you're on the blog here, it's that big red button right below the video tonight, and then I'll take you over to our page to register, right, for your membership level. All right. Don't forget, advanced course includes everything for tomorrow. There's a video in there you can learn more about there. If you're not ready yet to be a member, definitely take me up on that free trial. The free trial has your free trading course, where you'll learn all the details of the same trading strategy that we use in our trade room. It comes with hundreds of hours of examples of how we apply that strategy with our 4 favorite setups to our favorite futures markets. So definitely grab that free trial, take the free course. It'll dramatically improve the way you look at charts. Everybody loves it. And of course, don't forget, if you have any questions, you can always call that toll-free phone number. Call, chat, email, whatever the easiest way is to get help from me, guys. I'm always here. There's live support tool there right in the lower right-hand corner as well. That'll do it for me tonight, guys. Great job today. Having a great week here so far in the trade room. Hope you guys are having a great week there as well. One more session of the summertime season coming at you tomorrow morning. Hope I will see you there bright and early. If not, come on and see us again tomorrow night. We'll do it again tomorrow night, same time, same place, for the next edition of our nightly newsletter. As always, my name is Joseph. Thank you so much for being here. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.